I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Balara and this is the Know Your Why podcast. Today I'm here with Kent Ritter. Kent is a former management consultant, corporate executive, and startup owner, and now is a full-time real estate investor. So first of all, Kent, I just want to say thank you for coming on the show. I appreciate you doing that and taking the time out of your day.
Yeah, absolutely. Thanks for having me on here, Jason. And it's a great way to round out a Friday.
Yeah, for sure. I'm excited. I'm excited to hear your story. So with that being said, would you go ahead and give us a little bit of your background, kind of, I know you were in the corporate world, but sort of what that entailed and then how that brought you into real estate.
Yeah, absolutely. So like you said, I started my career as a management consultant. I was in that profession for 12 years. The last few years of that profession, I actually started my own business, my own management consulting business with several partners. And we grew that business in 5 years to about 30 million in annual revenue and 95 employees. And at the end of 2015, we decided it was the right time to sell. And that's what really kicked off my real estate career in a couple ways. One, had the capital from that exit and wanted to diversify and not have all my eggs in one basket in the stock market, and real estate really checked all the boxes for what I was looking for. And two, as I was phasing out of owning the company and now for a period of time going to work for the company that we sold to, I was really looking for a way to get off the road. And I had a small family, I had a family that was developing with small kids,
Yeah.
and I wanted to be present for all the magical moments that happen when they're young. And when you're a management consultant, you travel all the time. I was traveling almost every week, and so that just wasn't the type of father that I wanted to be. And so for really those two reasons, started investing in real estate, saw it as a way to create passive income and transition out and still have income coming in, but not have to trade my time for money. And then again, from an investment standpoint, it kind of checked all the other boxes of things I was looking for to complement my stock portfolio.
Perfect. So a couple of things, stood out to me there. One, I think that, that when your family, you've children, that's a common thing, right? I feel like a lot of people, when they have kids, it's easy to sort of work all the time and not think too much about how much you're working before they come along. And then you realize, hey, wait a minute, I would rather be home and see their, as you said, the magical moments, the things that all of those milestones, what they're going through as they grow up. So that stuff's becomes, sort of front and center. You mentioned that as a management consultant, you traveled all the time. And so what I found in real estate syndication, there's a lot of travel with that as well. So I'm interested to kind of hear that comparison between those two worlds and sort of how much traveling you're doing. And also, I just think having built your own company to such success, I'd imagine that plays a lot in your ability to now sort of do that same thing in the real estate world. So I guess that's kind of where I'd like to go first, is just talk about maybe how that transition was for you, how you have used what you learned, your experiences, all of that in the management consultant world, and then applied that to real estate.
Yeah, that's a good question. I mean, it's really applicable, right? I found that I was very well prepared to be a real estate investor because of all the work I had done over the years of being a consultant. So when you're a consultant, Really what you do is you help businesses solve problems that they can't solve themselves. That's why they were hiring us. You know, they run into an issue and they need help figuring it out. So you spend your whole career solving problems. You also manage teams of a lot of diverse people, a lot of folks that you don't have direct influence over, or a lot of folks that you can't direct, but you have to influence, right? You have to folks that maybe they're not your direct employees, right? It's your client, other vendors, a lot of different counterparts and stakeholders that you have to really influence, versus being able to just direct. And then lastly, just you manage a lot of large scale projects. So I was managing multi-million-dollar projects with lots of moving pieces and lots of players and parts, and all those things also happen in real estate. So when you're an apartment syndicator, I mean, you are managing large scale multi-million-dollar projects. You are working with a lot of different groups, many of which you don't are not like directly your team, and you can just really direct and give orders to, you know, even from the property managers you hire, which oftentimes are third parties, right? They're different companies, to the different vendors you use, to the tenants. All these people you really have to persuade and influence. And so, you know, I think that was a great skill set. And then real estate really is just about solving problems. I mean, if you can solve problems in real estate, you can make money. And it's not about like if a problem is going to come up, it's when, and it's how you deal with it. And so that's really what I've built my career around, is being good at solving problems, being good at, you know, defining the issue and being able to identify solutions, and then being really comfortable just managing change. And that's something that a lot of people are very uncomfortable with. We as humans, we don't like change. We don't like when things are different. But I've through just years of working through it, been able to become very comfortable with change and learned how to help other people through change. And I think that is extremely valuable, and translates very well into real estate investing as well.
Yeah, absolutely. You're 100%. It's not if problems will arise, it's when they'll arise, and then figuring out how to get through those. Maybe maybe I should have led with this question, but tell us a little bit about your role in your real estate company, and you know what your role is, what you're invested in, that kind of thing. So we have an idea of then we can dive into some of maybe the specifics of those, you know, pieces that you're managing.
Sure. So I'm the CEO of Hudson Investing. We are a Midwestern multifamily apartment syndication firm. And so we focus on properties that are, you know, primarily B class. We've got a little bit of C class, probably some B plus, I'd call it. Properties that are, you know, anywhere from, we've got a few properties that were built in the 70s. Most of our properties were built in the 90s and 2000s, throughout the Midwest. So currently we have properties in Indianapolis, Louisville, Kentucky, Lexington, Kentucky, and Dayton, Ohio. We sold a property last year that we had in Atlanta, Georgia. And so now we really are kind of wholly focused in the Midwest, and actively looking down into Eastern Tennessee, Georgia, and Alabama, as well as we kind of expand our territory. Outside of the acquisition side, we have a development arm as well. And we have 3 ground up development projects going on right now, where we're building about 300 units across 3 different projects. And so really as CEO, I oversee the operations. You know, I've got a team of 8 that works under me, but I have a direct hand in really what I consider the 3 verticals of the business. 1 being acquisitions, 2 being capital, both debt and equity, and then 3 being execution. And so, you know, asset management and how are we performing on those properties that we already own. So while I have individuals in each of those lanes, I really oversee all of that.
Yeah. And it coming from, you know, the background that you had, I'm sure that transition into sort of being the CEO of this team and managing all that probably wasn't probably wasn't as hard for you as it might be for a lot of people that are coming in from, maybe not having that same level of background in terms of business management. How did that work for you? Did you just kind of, I've talked to people that have done it in different ways where it's like, oh, we start, we're bootstrapping, or I did everything in the beginning and then you sort of over time hire people on. I've also talked to people that are treated it like the business that it is right from day one, and they're hiring employees and have people, kind of in each of those lanes that you described. What was your approach to it?
Yeah, I mean, a little bit of both. It definitely has grown over time, and the portfolio has grown over time. The need for additional staff team members has grown over time, but I definitely looked at it like a business from the beginning. And I think that's important for folks. I think you do have to realize, like, as a real estate investor, you're running a small business, and you need to approach it as a small business. You need to have, you need to have the different functions that are required to successfully run a business. Like, you need to have good accounting, you need to have good HR, you need to have good marketing. And so I really approached it as starting from the very beginning with an exercise of, one, creating a business plan. Right. I think it's very important to have a plan and a vision when you're getting started. So you know what you're going to do and where you're going to go. And then, so I started out with a business plan, and I started out with an org chart. And I started out really with a future state org chart for how I envision the business growing over time. And really I looked at it as, in 5 years, where do I think we'll be, and who will be, and kind of what will be the seats on the bus, if you will. And so that gave me a perspective of, okay. And then I thought about it as, okay, here's all the people I need. And I thought about it, okay, and in what order do I need to bring them on? And so that gave me really a good plan on, okay, first I need to find this person. And then once I get this many units, I'm going to need this person. And then I'm going to need that. And so it really gave me a plan on how to grow the business and how to do it really thoughtfully. And things obviously change, but you have to have a path. If you don't have, right, if you don't know where you're going, anywhere is fine. Right. So you've got to have a direction and a path, and then you just have to be able to pivot and adjust as things go.
Yeah. No, that makes total sense. I mean, do you mind sharing kind of what, at least I know it's not going to be the same for every person, but with your background in exactly, sort of this, how did you structure that? Because personally, that's something that I've struggled with. It's like, okay, I'm sort of doing everything. How do I decide, like, who I'm going to bring in, when I'm going to bring them in, what are those steps? And it's something that I think probably a lot of people are like, they get into this business. Okay, I'm just going to do this. And then you probably get to that point where you're, as you said, it's like, if you don't have a plan, you don't have the vision as to what you want that company to look like. Now you're a little bit stuck in, kind of limbo of trying to transition from a one-man show to being a true company.
Yeah. Sure. So I think a couple of things I'll share. One is, it's really easy to get stuck working in your business versus on your business, right? And what I mean by that is, it's really easy to get consumed by all the busy work and the day-to-day stuff, and never have the time to really think about, and like, take your head out of the weeds and look around and say, okay, what's that next strategic step I need to take? Right. So I think it's important to be intentional about scheduling time in your calendar to just focus on your business, meaning the strategy of how is your business changing, how is it growing, and thinking about the future, and then kind of identifying the steps you need to be able to get there. So I think, one, that's just a very practical thing. You need to put it on the calendar. Two, I think that, like, your first hire should probably be an admin assistant. And it doesn't have to be a full-time, person sitting at a desk like next to you. It probably likely is a virtual assistant. But that's going to be your biggest leverage point, first of all, and that's true of anybody. And that was even when we were um, consulting, businesses, that was always a recommendation if it was a busy founder. And so yeah, so get an admin assistant. That'll probably free up 30-40% of your time if you can hand over, email management and calendar management and booking travel and
Right.
stuff like that. From there, you think about, okay, growing out the rest of the team. And I think about the business in those three verticals I outlined, right? You kind of have your acquisitions or the deals, you have your capital or the money, and then you have execution. And, the thing about our business, if you're an apartment syndicator, is if you don't have a deal, you don't have anything. And also, if you have a deal, it really solves all your other problems. And so first focus on, either you're going to own acquisitions, or you're going to find or partner somebody that's going to own acquisitions and is going to do that, 24/7, because it's all about creating that deal flow that really drives everything else in the business. Right. So I would start there. And then you have the money vertical, and you've got to either decide, okay, am I going to own this? Am I going to partner with somebody that's going to own this? Or am I going to hire somebody to own this? But again, I think somebody's gotta own that. I think it's really difficult to do both, and to own both deals and investor relations and working with lenders and creating those relationships. And then the third is the execution. And so I think on the execution side, one of your biggest leverage points is going to be your property manager. Right. As an apartment syndicator, I would not recommend that anyone is directly managing their own properties. You're going to be too stuck in your business, and you're not going to have any time. You'll be too stuck on the deal you have and never able to find another deal. So again, you either need to hire somebody internally to do day-to-day management, or you need to hire a third party. And then I think as you scale up and you get to the point where you've got 1,000 units, 2,000 units, then you could look to hire an asset management person that really oversees the property manager and really is not day to day on the property, but is more week to week or month to month, and is really overseeing the execution of the business plan and making sure you're hitting the dates and milestones that you've outlined. And so that's kind of like a brief overview.
I mean, that's perfect. That's exactly what I was looking for. And I think really, really good kind of actionable advice for people listening that, hey, here's kind of the steps, and figure which of those verticals you're gonna live in, right? Like as the CEO, at least in the beginning, one of those is probably going to be your main focus. Now, maybe if you get really, really big, now you've got people under you that you're sort of managing in each of those components. But at the end of the day, somewhere, at least in the beginning, you're going to be probably a big part of at least one of those.
Absolutely. And you may be a big part of multiple. I mean, at the beginning, you're going to be a big part of all of them. But I think the people that stay a big part of all of them are the people that don't grow, or at least the businesses that don't grow, because you only have so much bandwidth. And so I think you either need to hire or partner your way out of that.
Yeah, makes total sense. I mean, at the end of the day, I've heard this said before, that you mentioned hiring an executive assistant, and I've heard if you don't have an assistant, you are the assistant, which I think is, once you get sort of in the weeds like that and you're just doing all the busy work, you do realize how very true that that statement can be. What does your portfolio look like right now? And I said mainly in the Midwest. What do you have under management?
Yeah, so we have about 650 units. We have, like I said, properties in 4 cities right now, and then we're developing another 300 from the ground up right now, and we have another 46 under contract for acquisition. And so, and so we are, actively pursuing properties kind of in Indiana, Ohio, and Kentucky, and then we're really beginning to, and this is part of us expanding our team internally, is beginning to expand into, like I said, Eastern Tennessee, Georgia, and Alabama. We had a property in Atlanta that we sold in last June, but we had been out of Georgia, and now we've started a new development down there through a partnership. I mean, I think that's a great way to expand your geography is through
Sure.
partnerships, because I like to have people that are boots on the ground wherever we're doing a project. And so yeah, so that's kind of our geography and focus.
And are you based out of the Midwest? I know you said your sort of all your properties are you kind of local to
Yep.
that area?
Yeah, I'm based in Indianapolis.
Okay. Okay. So you're close to that and then sort of expanding out, which I think, I mean, I guess it depends on where you actually live, but it does make sense if it's a market that makes sense to invest in, you might as well start kind of at least semi close to you. So at least, you're within
Yeah.
driving distance or at, if you need to
Yeah,
be.
absolutely. And you asked about travel earlier. You asked about if I still traveled a lot, and that was an intentional decision. You know, I knew if I was investing, you know, flying distance from where I live, that meant more traveling. That meant being away from home. So I really, for several strategic reasons, decided instead of going to, maybe the hottest buzzword markets in the country, to really take a different approach. And one, it was to, avoid all that competition, right? And because everybody's flocking to certain markets. Two, it was really to own my backyard, because I have localized knowledge that most people do not have. Somebody coming in and flying into Indianapolis to look at deals is not going to know it as good as I am. And then the other one was to avoid having to hop on a plane all the time, which I did for 12 years, and honestly, I'm just kind of sick of. And so what I did was I drew like a 3-hour radius around Indianapolis and said, okay, here's where we're going to start. Um, and outside, except for Illinois, I really stay out of Illinois just for uh, political and tax reasons. I lived in Chicago for 12 years, and so I was kind of intimately involved in all that.
Yeah.
So Indiana, Ohio, Kentucky are very solid. And so yeah, so for those reasons, I really decided to focus on the Midwest. And then as we've expanded, and as I brought people on the team that now I can leverage, so it's not just me doing everything, we've been able to expand our geographies.
Yeah. Yeah. It makes total sense. I mean, I think it's interesting. I mean, you came from a background of a lot of travel. So I'm coming from a background of not a lot of travel. So the real estate thing to me, and I live in Los Angeles, so investing locally is a challenge.
Mhm.
So to me, it's a lot more travel than I'm used to. So that's why that sort of struck me as I feel like you hear a lot about people, oh, we're going to tour these properties, or on the plane again, like that kind of thing. But yeah, if
Yeah.
you can invest in your backyard, by all means, makes total sense. Like that's going to save a lot of you know away from the family time and stuff like that. So I like it. um Kent, let me switch gears a little bit here. I want to ask you, start getting into some of the questions that I ask each guest. And the first one is based on the name of the podcast being Know Your Why. And so big question that I like to ask every guest is what is your why? What drives you, towards success and kind of keeps you going on when the days get hard?
Yeah. It's I think my why kind of have two, and it's evolved over time. So the first and foremost always is my family, and particularly my children. And that really, I mean, they drive everything that I do. I mean, I want to not only provide them with just an amazing life and all the opportunities that are available, but also just set a good example for them. Because if you are a parent, then you understand how closely they watch what you do. They pick everything up, and how you interact, how you act yourself, how you interact with others, the things that you say, they're just absorbing it like sponges. And so it's really made me very thoughtful about being the best person I can be, and treating others, the best way that I can, because I know that they're absorbing every minute of it. And so they really are my why, and wanting to just be around them and be a great dad was again, like I talked about at the beginning, one of those catalysts to say, okay, we need to make a change here. Let's figure out the right vehicle to get home and be present. The other as how it evolved was because real estate investing started out as a very personal endeavor. For me, I didn't set out to be an apartment syndicator. I set out really to just build a portfolio and deploy my capital in a smart way. And there was a time where I was like, well, I think I'm probably just going to like retire. Well, I don't have the personality to do that. I was 35 years old, and I just, I knew I had more in the tank. I knew I had more to offer. And I honestly just fell in love with real estate, started out doing smaller projects like fix and flips and, single families and duplexes and things, and even build out a note portfolio. And then really was introduced to multifamily, saw all the benefits and how it just beats all those other things, and really dove into that and started with podcasts and books, and then led to seminars and conferences and coaching and mentoring. And I just fell in love with it. I love like the tangible nature of it, where you can see this property and you can come in and you can improve it, and you can improve the condition for the residents, and you can also improve the financial position of all the people around you. Like I just thought it was amazing when I saw the impact that it was having on my finances, and how much my wealth was growing. I mean, I'd been a very active stock market investor since I was probably 18 years old. But I can tell you the returns that I get from real estate are 2-3x, if not 5x, in some projects, what I would typically get in the stock market. So my wealth has grown quite a bit in the last few years. And I'm not saying that to brag. I'm just saying that like that's the reason I think it's so important that people understand this. And what I realized, fancying myself a pretty savvy investor, being a finance major in college that really focused on investing, and having invested for a long time, I had no idea that you could invest in other people's real estate, and that you could just be passive in it. And that's how I started. I started from 2015 to 2019, just investing passively with other people. And I really used that, one, for the returns, but as I kind of got more into it, really used it to learn and started building relationships with other syndicators. And that's eventually how I formed my first partnership, and got on the GP side. And so all of that, because my mission really has evolved into just wanting to spread the word about this and tell as many people about this as possible. And that's why I started my own podcast, which is Ritter on Real Estate. And that's why I started a meetup in town, a multifamily investing meetup, because it's like, man, more people need to know about this. And it's not something that's widely marketed. On TV, all you hear about are 401ks and the stock market and all this. And like, the truth is, like, that stuff really like doesn't work. If you want to retire in a way that, in a lifestyle that you're used to, like, that stuff just doesn't work. Like, I think it's crazy to think you're going to put, let's say 5% of your income away for 30 years and think that you're going to live the next 30 years with the same income that you had the previous 30 years. It's just, the math just doesn't work out. And I think we're seeing that with people, because like the first 401k experiments like are now retiring. Right. And I think what we're seeing is people they largely don't have the finances that they wish they would have had. And so I think you got to have a different plan. You got to take action. My whole point in bringing that up is that's what my why has really become, is just spreading the word and then facilitating these investments for as many people as possible.
Yeah. I probably, I agree with you 100% and on all of that. I mean, our whys are very, very similar. And a couple of things I wanted to talk about there. First of all, how old are your kids?
6, 4, and 2.
Okay. Well, I have a 3-year-old and a 9-month-old. So I have that similar, like, young children that are, kind of really change the world for you. But the interesting thing you mentioned, as part of what them being a part of your why and wanting to, sort of be a good example for them, right? I think there's value in work and hard work and showing them that example, right? So if you're just like, oh, I did everything I needed to do, I'm retired now, that doesn't necessarily teach, aside from the fact that it's not your personality. And I completely understand that. I don't know that I'll ever retire, but it's just your kids aren't going to learn a whole lot how to be, sort of a functional adult if all they ever see is a retired person, because that's not likely to be
Yeah,
what
I mean,
they're
if daddy's just sitting on the couch playing video games
right.
all day, then
Right.
you're
Yeah,
not
that's
setting a great example for them to be productive.
yeah. And that's not, so yeah, that's not the example that you want to set for them. So I think that's a really great point. The other thing that I'm semi happy to hear, but also surprised, is as a finance major, that you also didn't know about syndication. Like I expect it from, I'm a veterinarian, like they don't teach us finance. None of that comes in vet school, but I would think someone like yourself would have had all of that, sort of in their background. So
No, you know what's funny? Like I even remember. I mean, it's been almost 20 years since I've been out of school now, but I even remember I took a real estate finance class, and we talked about investing in single family homes and how you should buy 10 single family homes and create a portfolio, but nobody ever talked about buying an apartment building. And
fascinating.
nobody ever talked about pooling your money together to buy an apartment building with other people.
Yeah. Yeah. I mean, because I feel exactly the same as now that I know about it. And I'm like, I don't know why this is a secret. I want to tell like, I'm sure some of my friends are just sick of me talking about it, because I'm like, this is very powerful. And
Mhm.
as you mentioned, your returns, you can't really even compare them to stock market. It's just it's not bad to invest in stocks. It's just a different investment vehicle that maybe has different, you have different goals, you have different potential there. But yeah, I think it's something that everybody should know. So I just sort of, everything you said in that, I was like, yes, that's it. I agree 100%.
Yeah.
That's amazing.
Well,
Second
and that's the
question.
cool thing.
Go ahead.
Oh, I was gonna say that's just the cool thing about I think the kind of the environment that we're in, of this environment of real estate investors. I mean, it's a group of people that think differently,
Yeah.
kind of are able to think outside the box, are able to kind of look past, I think all the marketing and stuff you get told, and just think differently. And I've just enjoyed kind of becoming a member of that group, and interacting with folks like yourself and others that can think a little differently.
Yeah, agreed. It's almost, yeah, it's almost like this like secret club or something like that, where it's like, the people that are investing in real estate are like, yeah, this is what you should do. It's like, once you
Mhm.
realize, it's very clear that this makes a lot of sense, whether you're doing it actively or passively, both of
Right.
them make sense. But it's just getting in that space is the way to sort of get out of the rat race, not have to trade your time for money. So it's a very interesting, sort of mindset change for me.
Yeah.
Um, Second question for you, a little shift of gears, but tell us something about yourself that maybe isn't common knowledge, special skill, a hobby, something that uh, is not out there that everybody knows.
Oh, that's a good question. Or well, if it's just something interesting, I've walked a tiger on a leash.
That's pretty cool.
we we went to my wife and I did our honeymoon in Thailand, and we went to like this like tiger sanctuary, and we literally got to just like walk around and hang out with the tigers. It was a pretty wild experience.
That's amazing. I have done surgery on the tiger, but
There you go.
I've never touched one awake, I guess is
Yeah.
that's everything I've all the wildlife I've touched has been asleep. So it's under anesthesia. So it's that I would actually love that. That would be very cool. Maybe I'll have to go to Thailand someday for that experience. That sounds awesome.
Yeah.
um, Third question for you is, when people hear this and they want to get in touch or reach out, what would be the best way to reach you? And we'll put whatever you want in the show notes.
Yeah, sure. I think my website is really my home base. It's kentritter.com. And from there, you can access my podcast, all the videos that we do, the educational content we put out, our blog, as well as sign up to invest if you're interested. And so that's probably the best way. You can also access my podcast, Ritter on Real Estate, either on YouTube if you want to see the videos, or anywhere else that podcasts are accessible.
Awesome. Okay. Final question, Kent. What piece of advice would you give people that are, maybe a couple of years behind you in their real estate journey? What would you tell them to encourage them or guide them? You already gave a ton of actionable advice as far as building that company, but just maybe someone in the beginning stages, what would you tell them?
Yeah, I think the best piece of advice I can give anybody that's starting out is focus on building relationships with, I'd say, two groups, kind of two and a half groups. So the first one is with your investors, right? And that's something that you need to start way earlier than you think you need to, and probably way earlier than you're going to be comfortable doing it. Way before you have a deal, because when you have a deal, it's too late. There's not enough time.
Yeah, and there's a real crunch.
You have to be warming up your friends and family at the beginning, and then it'll expand beyond friends and family as you develop your business. But your friends and family to the idea that you are a real estate investor and you are somebody that has the expertise and knowledge and trustworthiness for them to give you a significant amount of money. And it's a very different, you really have to change people's perception of who you are, because, and I say this because when I set out on my first raise, I only raised half as much money as my goal. I really underperformed. And the reason I did was because I really underestimated exactly what I'm saying is the need to really change people's perception, because, they may view you as, for example, like a guy that played football with in high school, or a fraternity brother in college, or a golfing buddy, right? Or a coworker. But that's a very different point of view than trusting you with $50,000 or $100,000 of their money to give them a return. Right. So I think you need to start early. I think you need to get an example deal. You need to put together a presentation, and you need to go and you need to present it, and you need to do it formally. I tell people, like, don't make it weird. Like, if it's your buddy you go and get beers with, like, don't, try to do this super formal thing, but say like, hey, let's go grab a drink. I'd like to run this by you. Right.
Yeah.
But you need to practice your pitch and presenting. And you need to practice, and you need to get them comfortable with the idea of, because a lot of people, like we were just talking about, like, are not familiar with real estate investing. And if you're not familiar with it, the way that our brains work is, if it's foreign, it is risky, it is dangerous. Right. And so you have to familiarize people with it. And you probably have to start with, well, why should they invest in real estate? Tell them why they should invest in real estate. Then tell them why they should invest in multifamily real estate versus all the other types of real estate that are out there. And then once they believe they should invest in multifamily, convince them why they should invest in multifamily with you. And then when they believe they should invest with you, then it's time to actually talk about the deal and tell them about the actual deal that you have and why that's the deal. So that's why I say, like, you got to start way before you have a deal, and you don't even need to really have a real deal. Just get on a broker's list, get any deal that looks decent, underwrite it, because you need to be practicing underwriting anyway at that point. You just need to underwrite a lot, and then just put that together. And then at the end, you're just say, so if I brought you a deal that was similar to this, that had similar returns as this, is that something that you might be interested in? And I think that's the right way to get started, and start that like 6 months before you actually think you're going to need to raise money. The other group would be brokers. You got to start building relationships with brokers. Brokers control 90+% of all the deals that are out there, especially if you're looking at things above 100 units. And so they really are the gatekeepers. You have to start building relationships. You again have to get them to take you seriously, and you need to try to become their friend. Like, that's the best way, really. Like, it's an easy way to kind of say it.
Yep.
And the last one, I'd say the half, because they're still important, but not as important as the first two, is with lenders and bankers, and I think it's important to start to build relationships with community banks. I mean, you can go out and get an agency loan, Fannie or Freddie, and that's very transactional. But there's going to be some instances where you're going to want to use more flexible debt. And that's going to come from a community bank. And those are highly relationship driven again. And so start building those relationships, and start, that's what the business plan's for, right? So you know what you're talking about, you know what your vision, and you can outline that for each of those groups.
Oh, that's fantastic. That's really great advice. And I think you're spot on. I mean, I can't tell you how many times I've heard you have to start talking to investors before you think you do. And, it's going to be, you're going to raise half of what you think you're going to have to. And it's like,
Yeah.
and then everybody
I'm
still
definitely
does the
not the
same
only
thing.
one.
Right.
Yeah. I'm
Everybody
not the
says
only
it,
one.
but everybody still, like, everybody does it. It's like, you definitely are unprepared to raise capital until you actually have to raise capital. I think it's just like, it's so true. Like, you have to prime this, but I'm not sure that people necessarily take it that seriously until you have an actual deal. I don't know. But I also know that I didn't do what I should have done. Like, it was like, I should have been even more pushing, more talking about it and stuff. So it's a thing that can't be stressed enough, right? It's just like, that's going to be, because most people are uncomfortable with that. Most people are uncomfortable with raising capital and asking for those, those investment amounts. And most of the people you're asking are uncomfortable with it as well.
So it's I think there's a lot of limiting beliefs involved, right? There's a lot of limiting beliefs involved. Why would they ever invest with me? Who am I to do this? Right? Oh, they're not going to listen to me. That stuff's all in your head. It's all in your own head. It's not in anybody else's head. It's just in your own head. So you gotta get past that stuff. And I think one way to do that is you gotta change your story, right? Like you even said, and I'm definitely not calling you out, but you even said, that, what was the language you used? Something like, oh, you want to it's uncomfortable asking for money.
Right.
Don't ask for money. Offer them an opportunity that's going to improve their lives. Right. And if you can shift your mindset to that if you can shift your mindset to this is really like a service you're offering. Like, if you don't offer it, like if you don't offer this to your best friend is not going to be as well off financially as they could be. You're really doing them a disservice. If you love them and like them, why wouldn't you want to put them in the best position that they can? And so it's your job to help them get over their own limiting beliefs, and get there, because ultimately it is going to be the best thing for them. I mean, as long as you know what you're doing, and as long as you have a good plan in place, right? But it really is. So look at it as you are offering them a fantastic opportunity.
Yeah, no, you're 100% right. And even when sometimes I hear myself say it, I'm like, oh yeah, you're asking for money. And I'm like, no, you're not asking for money. And it's getting past all that stuff. So you're right on.
It's not easy. It's not easy. I did all the same stuff, and I still do all the same stuff. I mean, I have moments where, those limiting beliefs, once you, like you say, people say they crush limiting beliefs, like you can get past them, but they sneak up. They're sneaky.
Right. They're still hidden in the background.
Yep. And so you just have to be vigilant with your mindset. And I think the story that you tell yourself.
Yeah. Yeah. 100%. And I think that is a perfect piece of advice to end that on. I want that to be the last thing that people hear. That's phenomenal. But Ken, thank you so much for coming on. This was great. I think everything you said is spot on, and people can actually use it, can really, kind of take that and run with it and put it to use in their business and their investing. So thank you. Appreciate your time.
Yeah. Thanks for having me on, Jason. I really enjoyed talking with you, and hopefully people can learn from my lessons learned, and avoid some of those mistakes, and hopefully they go out and raise money and they raise double their goal. That would be awesome.
That would be perfect. Yeah. Here's to raising double your capital.
There you go.
Capital goals. All right. Well, have a great day, and we'll go ahead and sign out.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.